It looks like the Federal Reserve is wasting no time with inflation in 2022. In December of 2021, the Federal Reserve had a massive meeting on how it was going to combat inflation in 2022. And now it just announced it's going to get even more aggressive when it comes to inflation. And it showed investors and the rest of the world exactly how it was going to do that. Now, after this announcement, the stock market essentially tanked. And not only did the stock market tank, but the cryptocurrency space, including Bitcoin, also went down significantly. So today I want to discuss what the Federal Reserve said in its most recent announcement, how it's going to battle inflation in 2022, and what this is all going to mean for our economy. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. Oh, and before I forget, big things are coming to this very channel on February 1st. Officially on February 1st, we will be known as Market Briefs, just like our newsletter, and we're going to have a ton of other exciting announcements, so be sure to stick around until then. Here is everything you need to know about the recent Federal Reserve announcement. According to the Federal Reserve, they are going to get a lot more aggressive when it comes to battling inflation. Now, here is what that means. That means raising rates, interest rates to be more specific, in 2022, and they're also going to do as much as they can to reduce the amount of assets that they hold on the stock market. Now, if you remember all the way back in December, the Federal Reserve announced that they were going to start tapering their quantitative easing measures. Now, what exactly is quantitative easing? Well, quantitative easing is when the Federal Reserve enters the market and essentially starts buying bonds and treasury notes. These bonds and treasury notes are directly linked to companies. They're like corporate bonds. That means you have the Federal Reserve essentially buying billions of dollars in bonds every single month, and that meant that there were billions of extra dollars floating around on Wall Street. However, by December of 2021, they announced they're going to be pulling a lot of that. Now, that is nothing new, but what is new is that a lot of experts in the Federal Reserve believe that inflation is starting to get way out of control, and in order to curb it even faster, they're going to have to start tapering even more and maybe even sooner. Right now, experts and the Federal Reserve has kind of hinted towards starting its tapering around the spring of 2022, so around March or April. Then, a lot of experts and the Federal Reserve believe that it would be appropriate to start raising its rates soon after. So we could see a few rate hikes at the start or the middle of the summer this year. And they're going to be raising interest rates a lot in 2022 and in 2023. In 2022 alone, experts believe that the Federal Reserve will raise its benchmark interest rates 3 times. These will be a 0.25% increase. So right now, the Federal Reserve has set its benchmark interest rates at 0. This is 0%, and it's been like this since around March or April of 2020. That is a long time, and it has allowed a lot of people to get loans relatively cheaply. And they are not stopping there, because in 2023, there's going to be 3 more percentage increases. And then in 2024, at least 2 rate hikes are expected to happen. So if all of this is expected to happen, then why exactly do we see the stock market and major cryptocurrencies starting to fall? Well, the major reason behind the dip after a Fed meeting like this is because as the Fed starts to do a lot more in regards to inflation, and the harder they actually push for inflation to start going down, that means they are taking inflation more seriously, which you'd think would be a good thing. However, it shows the stock market that inflation might actually be a big problem. Let's wind back the clock all the way to 2020 and the early parts of 2021. The Federal Reserve, President of the United States, and a ton of experts on Wall Street were saying that all of this inflation that the United States is experiencing is all transitory. Transitory meaning that it is being caused by something specific and that it will go away once that specific thing has ended. For months, the Federal Reserve talked about how inflation isn't really a big deal. It's going to go away, it's going to go away, so nobody really needs to worry about it. And you had a ton of experts that basically came out and said they don't trust the Fed. like Robert Kiyosaki, and you also had Bill Ackman say that the Fed is actively lying to you about inflation. And this is kind of a difficult situation for the Federal Reserve, because on one hand, the Federal Reserve is saying that inflation is all transitory and it will go away. And a lot of experts believe the Federal Reserve says that because they don't want to scare the markets and they don't want to scare the American people. If the Federal Reserve comes out and says inflation is a massive problem, then the American people might be scared of spending. That is a huge issue for our economy because our economy functions on people spending money. And if people aren't spending money, that means businesses aren't going to get any money. That means they can't pay any of their employees, and eventually the businesses and all of the employees and our entire economy is going to crumble. So instead, the Federal Reserve is going to talk about inflation as something that's not a big deal. That way, Americans can feel very secure in their spending and Wall Street can continue as normal. And for a long time, we didn't really feel the effects of inflation. But once the pandemic really started in March of 2020, inflation started to go up. Now here is a chart of how inflation has gone up since March of 2020. You can see how it's kind of gone up steadily ever since the pandemic started. And the reason for that is because of supply chain issues. When the pandemic started, everything needed to shut down. We had economic lockdowns for social distancing measures. It was to keep everyone safe and to try to slow the spread of the virus. However, we found out later that all of our economic closures were going to lead to supply chain issues. Nothing was being made, so everything got backed up and demand never really dropped. People continued to buy things at the same rate, and in some cases, people bought things at an accelerated rate. I'm sure you can remember the toilet paper pandemonium of 2020. It was hard to keep that on the shelf. But it was more than just toilet paper. Pretty much every industry and every market in the world was affected by the pandemic. And because of the supply chain issues, every American's wallet was affected by the pandemic. Now everything costs more because it's hard to get things. Basically, our economy works on spending, but also on supply and demand. So if we have a high supply of something, but nobody really wants it, then that thing is going to be very cheap. However, if the opposite happens, we have a very high demand and a very low supply, well, then you can imagine that that thing or service is going to cost a lot. And unfortunately, that is pretty much everything right now. From cars to basic goods and services and even homes, everything costs more because we have a very low supply and a very high demand. And it got so bad that by November of 2021, inflation hit a new 40-year high of around 6.8%, which is all according to the Consumer Price Index, which basically looks at the prices from month to month and averages how much things are going up and how much things are going down. So that was the specific issue that the Federal Reserve was saying was causing a lot of our inflation. However, the Federal Reserve did a lot of money printing in 2020 and 2021. I mean, we threw trillions of dollars at this pandemic, and guess what? We are still in it. So all of that inflation is going to be accounted for in 2022. Basically, the definition of inflation is when your monetary supply starts to go up, meaning the government and the Federal Reserve is actively printing more money. And when they do this, every single dollar within an economy starts to go down. This is because more people have access to money, more people are spending, and more people can buy things. The only way to really counteract that is for businesses to start raising prices. Businesses can't just continue to make all of the same things. If they make everything at the same rate, then shelves are going to continue to be empty. So businesses have to start making more, and the only way to make more is to hire more workers, build more machines, create more factories, and so on. All of that costs money, and eventually they trickle those costs down to the consumer. Now, I will say, according to the Federal Reserve, some inflation is healthy. 1 to 3% of inflation every single year actually shows that your economy is growing. That means the Federal Reserve needs to print more money, and they need to print more money because businesses and people need more. There is a lot more value in our economy. Think about it. The Federal Reserve and our United States government doesn't just print money for no reason. The Federal Reserve prints money so that it can be given to the United States population, and that population is going to start businesses, and they're going to invest, and they're going to create things so that everyone else has more. That's basically how capitalism works. And if they only print a small amount, sure, prices are going to go up, but wages are also going to go up. We've also seen this happen in 2021 and now in 2022. The minimum wage and wages across the country are going up, but this is in a response to inflation, and businesses can't possibly give workers a big enough raise to meet inflation. Not every single company can afford that. This is exactly why we typically talk about raises being around 2 to 3% every single year, because the Federal Reserve thinks that inflation should be around 2 to 3% every single year. One of the only reasons that a job gives you a raise of 2 to 3% every single year is because they need to make sure that you are making enough money to meet inflation. But really, you're not actually making any more. I mean, not unless you're getting raises of 10 to 15%. I mean, if this is the case, then you actually are beating inflation every single year at your job, but most people are not doing that. So that was a bit of a tangent, but the Federal Reserve is now talking about starting its process of pulling back all of its stimulus measures a lot sooner than expected. That means they're indicating that inflation is getting even more out of control than even they thought. Even still, most experts are expecting the first rate hike to come at around March of 2022. So like I said, why is the stock market still so upset about what the Federal Reserve is saying right now? Well, the other reason is because the stock market has been receiving a ton of money. I don't really know how else to say this, but the stock market loves it when the Federal Reserve and the United States government decides that it's going to print more money. This is because we live in a capitalistic society. They know that that money is ultimately going to be trickled down to the consumer. And the majority of Americans are not all that great with their finances. So when the Federal Reserve decides that it's going to print trillions of dollars, that money ultimately goes to you and everyone around you. People end up spending that money on products, and they end up going to Walmart and they buy electronics, and these stores and companies that are also conveniently publicly traded on the New York Stock Exchange start going up because they start showing record profits. If the United States government printed trillions of dollars and all of a sudden Walmart gets a few more $1 billion in sales, that is going to look great to the investors. Even though everyone really knows that it's because of inflation, the average investor might not know that, especially the beginner investor. So they start pouring money into that company because look, they made billions of dollars. It's such a safe investment. However, there's a lot more going on here. But now all of that is going away. And sure, the stock market is expecting the Federal Reserve to eventually pull all of its billions of dollars from Wall Street and to start raising rates. But if it does it way too soon, that means the stock market is going to get really scared. Basically, when the pandemic first started back in March of 2020, there was a lot of economic stimulus measures. One of those measures was dropping benchmark interest rates to around 0%. If they start going up to 1 or 2% again, that means that millions of Americans are going to have a difficult time getting a loan. They're going to have a difficult time getting a mortgage or an auto loan or just a personal loan. Banks and institutions are immediately going to take a hit. And not only that, but all your automakers and your mortgage lenders and housing market are going to take a hit too. All of that is tied to the stock market in one way or another. And if things start going down because Americans start getting a lot more frugal, the stock market is going to drop. And that's just a lot of mystery for the stock market and the cryptocurrency market. Now, I kind of mentioned that the cryptocurrency market was dropping too, and that is all in part to this new Federal Reserve meeting. For one, this is a very complicated issue, and Bitcoin is a massive asset. A lot of major companies like PayPal and Square and exchanges like Robinhood and Coinbase are all traded on the New York Stock Exchange. So if the Federal Reserve makes an announcement announcement that it's going to start pulling money, investors have their money naturally in a lot of these companies, and they're going to start going down. And investors that just invest in cryptocurrency are going to see all of these major companies who have put billions of dollars behind crypto start to go down, and they are going to get scared too. This is exactly what we saw after the Federal Reserve's announcement. So basically, your companies and funds start to go down, and now we have ETFs that are focused on Bitcoin futures. Those funds are going to go down too, and if investors start losing money, especially a lot of money, they pull their money out. And that's something that happens in just about every market, but cryptocurrency is a special exception because there are brand new cryptocurrency investors entering the market every single day. I mean, cryptocurrency is still a very new asset class. I mean, what? Bitcoin has only been around since 2009. That means it's only had around 13 years to grow where it is today. Versus the stock market, which has been around for about 100+ years. And two, this could just mean the reversal of cheap money. Now, a lot of experts have talked about cheap money over the last 2 years. Basically, they mean that the Federal Reserve and the United States government and any government around the world is a currency issuer. They can print as much money as they want and throw it at a problem. Every time they throw money at a problem, that money becomes cheaper every single time. So a lot of investors have turned to cryptocurrency because cryptocurrency is not cheap in terms of how much can be made. For instance, there can only be 21 million Bitcoins in existence, which sounds like a lot. But if you compare that to our traditional money, there is well over $2 trillion currently in circulation in the United States. So Bitcoin doesn't even scratch the surface. And like I said, once you reach 21 million Bitcoins, you can't make any more. So it's deflationary. There is only so many, and the buying power will eventually become stable if the value stays the same. Traditional currencies are not like that. However, the Federal Reserve is pulling back a lot of its economic policies, and they're getting serious about inflation, meaning they're going to start shrinking our monetary supply. The less money that's being printed, the less access people have to get money, well, that could have bad implications for the stock market. But it could also have bad implications for cryptocurrency because now there isn't cheap money anymore, and the US dollar is still arguably stronger than cryptos. That makes cryptocurrency investors worry because one of the big draws to crypto is that it stores more value than the US dollar. But if the US dollar isn't cheap anymore and the Federal Reserve stops printing a lot of it, well, then you might actually have a better asset in dollars versus cryptocurrencies. And what exactly is coming next for our economy in 2022? Well, nobody really knows the answer to this, and that is part of the reason why the stock market and cryptocurrency investors throughout the United States are getting a little scared. Nobody really knows what the Federal Reserve is going to do, and nobody really knows when our supply chain issues are going to become solved. Remember, our initial supply chain issues were caused by the pandemic, and they're being perpetuated by the pandemic because everything occasionally has to close down. In addition, we now have the Great Resignation and labor shortages as a lot of people are moving out of jobs, and it's putting a lot of pressure on businesses. Right now, our pandemic is still here. The Omicron variant is spreading throughout the country and is now pretty much the dominant strain of the virus in the United States and the rest of the world. We keep seeing new strains, and this pandemic is now continuing. And if the pandemic gets worse and we start seeing economic lockdowns or social distancing orders starting again all throughout the United States, that is going to hurt businesses and it's going to hurt people. In general, people are not going to want to go out if there is a raging pandemic. I mean, sure, some people will go out, but not the vast majority like they did before. I mean, there was no reason for people to stay inside. Now, there is a reason. So online retailers might do okay. However, you're going to see a lot of problems in general that is being perpetuated by the pandemic. And inflation just continues to go up because now people are spending more time at home and they're spending more money. I mean, we're starting to see wages go up in the United States. Prices are going to lag behind because as people buy things, businesses are then going to have to make more. So then prices will go up. But As of right now, wages are up, unemployment is down. Unemployment by December of 2021 was only around 4.2%. So you've got to wonder, when is inflation going to drop? It continues to just go like this when it needs to flatten out. The Federal Reserve is keeping an eye on this, and if inflation continues to just go up and up and up, then they're going to have to get even more aggressive, and they might even have to start telling the Americans that inflation is a problem. So much so that they might have to raise rates even more, and they may have to start pulling a lot of their money even faster from Wall Street, which could make the stock market go down super quickly. It could also send the housing market into free fall because now nobody can afford to get a mortgage, and all the houses that you have for sale are going to have to drop in price. So once again, it all really depends on what happens with inflation and our economy, and it depends on what the Federal Reserve decides to do. If they take a much more even approach to everything, well, that might mean inflation goes up even more, but our markets and economy kind of stays stable. I mean, as stable as it can be with people spending a lot more than they probably should for the same goods and services. But if they pull a lot of their stimulus too fast, then that could send markets and our economy into a quick recession. But they have been very clear. They can no longer be very loose like they were in 2020 and in 2021. All of that is going away, and all of this free money and ultra easy policies are out the door too. But now I want to hear from you on this issue. What do you think about the new Federal Reserve announcements on inflation and their new stimulus measures for 2022? Do you think that ultimately this is going to help our economy, or do you think that our economy may see a recession by the end of this year caused by inflation and too strong of Federal Reserve policies? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.